Good afternoon, ladies and gentlemen. I'm Pragyat, your host for today's webinar. It gives me immense pleasure welcoming you all to the live webinar on the theme of Intracies in GST annual returns and possible resolutions. This webinar is hosted by Cyber Media Research in association with Tele. For the duration of presentation, all participants' lines will be in listen-only mode. After the presentation, we will have a question and answer session. Your feedback is very important for us. Please submit your feedback at the end of the webinar. Now I would like to hand over the floor to Mr. Anil Chopra, VP Research and Consulting, Cyber Media Research, who will share his insight on about Be Unstoppable. Thank you and over to you, sir.
Thank you, Pragyat, for introducing. And good afternoon, everybody. Welcome and thanks for joining in on this webinar today. Before we actually start on the actual webinar, I thought I'll just do a quick introduction on what exactly is this Be Unstoppable that you see in front of you on the slide, and you would have seen in the invite and everything. So basically, I'll give you a quick overview of this. Actually, this webinar is a part of a much bigger initiative, and that is called the Be Unstoppable initiative. And I'll talk about that in a while. I think it's important to kind of look at, get a quick market overview. Again, basically a lot of reports that we're seeing in the market as far as tech spending is concerned. Today we are living in a digital world where, without IT, it's impossible to actually do any kind of business. And thankfully, the adoption of IT is growing steadily year on year. As per the report here, there's about 6.7% growth, and it's likely to touch 89 billion US dollars by this year. The IT spending, that is the kind of IT spending we're looking at over here. The other good news is that the growth that we're seeing across businesses in the country is actually beyond metros. Metros, of course, have a good number of businesses who are there, and they're also growing. But the interesting thing is that life is moving beyond metros as well. In fact, according to another report by Oxford Economics, the top 10 fastest growing cities by GDP in the world between this year and up till 2035 are from India. Now that's a very significant achievement as far as India is concerned, as far as the businesses in India are concerned. And, a major contributor to this growth are the Indian SMEs. They are ultimately the growth engine for the country. And according to McKinsey, about 49 industry clusters are going to be the growth hotspots, and they will contribute about 77% of India's incremental GDP growth. Now, those are pretty phenomenal figures, and the overall bottom line I want to say is that the growth in the country is happening. It's on a high, and but the only thing is that while that growth is happening, and there are a lot of constraints as far as large enterprises are concerned. There are lesser constraints in terms of resources or manpower or skill sets. They're all available to them. But when you look at the small and mid-sized segment in the country, the constraints continue to be there. Like the lack of the right knowledge or the skill sets, or getting the right financial advice or mentorship. In terms of a lot of these challenges, they continue to happen. Of course, infrastructure and policies are a separate topic altogether, and not something that I can really talk about over here. But yes, the government is trying to promote a lot of that through various initiatives by infrastructure building and all that. But that's not a topic of discussion over here. But the only thing is that, to enable this growth, these challenges have to be overcome. And, what's required is, for this growth engine to have the right level of knowledge, the right skills, the right kind of mentorship and advice, and then only they can actually be unstoppable, which happens to be the name of the initiative that we've actually, started off. So, which actually brings me to a little more detail about what the initiative is all about. There are multiple things in this initiative. So as a part of this platform, there's going to be an online knowledge platform, but that's just one where you'll have plenty of content which is useful across different types of functions, and it's going to be meant for business owners, functional heads, across finance, across HR, across marketing, and of course the IT managers. So this platform is meant for everybody. and so the online content will be there. Besides that, we are reaching out through webinars like this one through our partners, and we do have an expert CA with us today who will be just talking after me on a very important topic that is very relevant for today for a lot of companies. There'll be mentorship by experts on a regular basis. There'll be events and workshops that we'll keep conducting. And of course, we'll be recognizing a lot of SMEs for the achievements, for the growth that they have achieved throughout. And of course, we'll continue to bring a lot of interesting products and solutions from our partners. Incidentally, this platform is powered by HP, and our partners for this would be Tally, Freshworks, and Kotak as of now, and we'll continue adding more partners, and who will continue to bring you very, very relevant, activities, initiatives, content, experts, for around business and strategy, around skills and knowledge to develop knowledge and skills, for providing mentorship advice, and of course for around financial advice. So I think it's an exciting platform that we are starting off, and I would encourage you to be a part of this platform, to take it, be a part of the community, so that we keep sending you regular updates, because this platform is meant for you, and to address some of the challenges that you face, so that you can actually be unstoppable. And that's, I think, in a nutshell, what this platform is all about. And as I mentioned, that this contains more than just regular articles. It actually provides the content across a lot of different varieties, whether it's videos or white papers or ebooks, case studies, contests, and all that. And of course, mentorship and advice, or visionary business leaders who will come and talk and provide their experience, share their experiences with you around how they've actually grown their business, provide advice on how companies can actually grow their business. So it's actually far beyond just a basic online platform to access the content. It's actually much more than that. So that's what the Be Unstoppable platform is all about. Please do register. I think the link is there in front of you. Do go through the link, go through some of the content, which he will keep updating on a regular basis, so that we can keep giving you the latest. And it will also pop up once you fill up the feedback form after the webinar is through, so that I do encourage you to be a part of this community and stay tuned, because this is really, really going to be useful for all of you. So thanks once again for listening in, and I do hope thank you all to join us for this webinar. We'll keep bringing more of these webinars on an ongoing basis throughout the year on different topics meant for different functions inside the organization, and we'll keep doing events for different people, and have right experts to provide you the right level of knowledge that you really need to enhance your skills or to even grow your business. So thanks once again, and I'd like to hand this over back to Pragyat for the remaining proceedings. Thank you.
Thank you, Mr. Chopra, for setting up the platform for today's webinar. Now it's my pleasure to introduce you to the next speaker, CA Annapurna Shrikant, and she will share her insight on the Intracies in GST annual returns on possible resolutions. Thank you, and over to you, Ms. Annapurna.
Yeah. So thank you, Mr. Pragyat, and a very good afternoon to all the participants. I'm sure that you're looking for a lot of discussion, positive discussion, and possible resolutions with respect to the intricacies in the annual returns under GST, and also what could be the possible resolutions therefrom. I would like to take you through the session synopsis for another 40 minutes of time, what we will be taking through, and then at the end we are going to have a Q&A session. Firstly, we would start with the applicability of GST R9, who all would be required to comply to this requirement. As we all know that GST has been a compliance-driven law where there is a lot of requirement of monthly compliances, quarterly compliances, and annual compliances. So at the outset, we must know whether at all the filing of this form is required and who all are required to comply to it. And then we would be dwelling upon the prerequisites and the note points pertaining to GST R9, Then we will look through the overview and journey of GSTR 9, how it was when initially it got introduced, and what are the latest developments and latest clarifications provided from the government perspective as well, and also the portal functionality for that matter, to get a overall idea of what it was and what it is today, because it has been a very evolving and and there is a lot of dynamism even in the form as we move through it. And post that, we will try to understand the intricacies involved in the law, in the form, that is the annual return GSTR 9. What should be the source of the data for filling the form? Then what are the liability related issues, the input tax credit related issues, and what are the various reconciliations, and if at all any differences arises out of it, and how to handle such mismatches, and how do we report the same, and also some other aspects which are there in the annual return form. And finally, there will be a 15-minute window open for the Q&A, which can be provided through the chat box from the participants. Now, before we start with getting the overview of the annual return form, it's time for poll, which is a question 1, which would be put across by Mr. Pragyat, and it's already on the chat box. So the objective of this poll, question 1, is we would like to know what kind of participants do we have today in the webinar, so that we can customize the contents of the webinar to them. I request all the participants to participate in this poll. And the time is 1 minute, so 25 seconds already over. So the balance of the time, kindly click on the option. So I hope all the participants have submitted the reply to that question. So now we move on. So annual returns. Now a primary question arises where we have already been filing the monthly returns, being the GSTR 3B where we pay our taxes, and also the GSTR 1 where we submit our outward supply related information. Why the necessity for annual returns? Basically, we have understood that ever since the law has begun and we have started the compliances, so we understand that there is no revised return option available under GST. So that being the case, if at all any errors occurred, especially during the initial phases where people were trying to understand what are the forms and how the data needs to be filled into all those things, so there could have been a lot of errors, inadvertent errors and all that. So then if such errors had occurred, then what is the way out? Then government had clarified through a circular titled 26/2017, dated 29th December 2017, telling that any errors which had occurred during the previous month's return filing could be rectified in the forthcoming returns, be it 3B or 1, and the procedurals for the same was even specified in that particular circular. This being the scenario, the data for the financial year 2017-18, when I say financial year, since GST was introduced only from 1st of July 2017, so we can consider it the data pertaining to the 9 months, that is July 2017 up until March 2018. So these 9 months data could have been reported by the registered persons over 21 months, right? That is 21 months being 17-18 from July to March, and 18-19 from April to March again, owing to the lot of extensions and facility to include and avail the input tax credits, all those removal of difficulty order and all those things. So the idea is the data has been split. The data pertaining to 1 year has been split in the return furnishing in 2 years. That is in a span of 21-month returns. Now, as a finality, one needs to know as to what is the final data pertaining to 17-18. Voluntarily, what is that the assessee wants to declare as a final data to be furnished to the government as far as the year 17-18 is concerned. Why I iterating this quite a bit is it is very important to make use of this last opportunity to fix up everything and try to provide the accurate information pertaining to 1718, so that from an assessee perspective there is a voluntary compliance to a greater extent. Again, I would like to iterate here that there is no revised written option under annual returns. Hence, one needs to file the correct information with a thorough checking of the data, so that if any errors occur in annual return, there is no way out we can rectify it. That being the scenario, taking proper time, compiling all the requisite information is something very, very important. Now, coming to the applicability of the annual returns and also the audit as far as the GST is concerned. The annual return is to be furnished by every registered person. In fact, there is no threshold limit to be ascertained for the purpose of annual return filing. Let's say there is somebody who has filed a nil return since he had no transactions in that particular year. Probably he registered at the end of that February or March, and he did not commence his business yet, and there was nil transactions during that period. Yet he is required to file a return. There's somebody who has a turnover of say 25 lakhs. Even he is required to furnish an annual return. Thus, there is no requirement of threshold as to decision or based on that threshold to that particular turnover criteria will only require to be filing the annual return. So let us be clear that every registered person needs to file the annual return. Now, there are only 5 exceptions to the filing of this GSTR 9, which is the annual return for the regular registered person. One is the input service distributor registered person, a casual taxable person, a non-resident taxable person, a person who is exclusively registered for the purpose of doing the GST TDS compliance, and an e-commerce operator for whom the TCS provisions are applicable. There is a separate form for the TCS related persons, that is the e-commerce operator, which is called the 9B. However, the same has not been notified yet. In fact, if there is a composition dealer where he opted for a turnover tax payment where he is not availing the ITC and all that, he is required to file GSTR 9A. Thus, apart from these 5 categories of people, every registered person is required to file the GSTR 9. Now, suppose if a particular registered person's turnover exceeds 2 crore rupees, then despite filing this GSTR 9, which is the annual return, he also is required to get a GST audit and certification done and submit the reconciliation statement, which is called as GSTR 9C, duly certified either by a chartered accountant or a cost accountant. Now, the question arises, what is the time left to do this? Going by the law, the due date for filing the annual return as well as this reconciliation statement duly audited is 31st December following the end of the financial year. However, 1718 being the first year of implementation and also the forms were notified only in September 18 and then revised and all that. I'll take you through the history of GSTR 9 as well. So post that, the functionality in the portal got ready. That's why the due date was extended up till 30th June 2019. I'm sure all of you are still speculating that the outcome of the upcoming GST Council meeting, could there be an extension or could there be a waiver or could there be a withdrawing of the form. All these speculations are going across in your mind. But personally, I would prefer having a waiver of late fee rather than an extension. Anyways, that is for us to wait and watch, looking at the outcome of the council meeting as to what is the call they are taking. But it is definitely a wise choice to be prepared and keep our data compiled and ready so that we will not get into the mad rush of the last moment filing where we face all the technical glitches and all that. So let us be prepared with our data for filing the annual return within the time. Now it is time for the next poll questions. So this the replies to your poll question, to the poll questions, will definitely help us understand the participants better. So there is a question right up there which says, I understand GSTR, nothing, maybe a fresher, or I understand basics, I understand fairly the GSTR 9 or I'm well versed with it, kindly click on the submit button, choosing your choice. So another 20 seconds left for you to choose. So we would greatly appreciate if the participants can submit their choices among the 4 options provided therein. Okay. So now we can give the Q3, the question number 3. The Q3 says that the status of my annual return haven't started yet, prepared and kept pending for clarifications, ready to file or already filed. Kindly reply to this poll. Okay. So we are moving out with the prerequisites and the note points before starting up with the GSTR 9 data compilation. Firstly, we should bear in mind that all the relevant GSTR 1 and GSTR 3Bs for all the months, that is from July 17 to March 18, has been mandatorily filed, because if these are not filed, then definitely there cannot be a enabling of the GSTR 9. So and as I mentioned in the beginning of the session, it is very important to note that there is no revised return option even for the annual return. Hence, one needs to be extremely careful and recheck all the data what is being submitted. And those who filed nil returns also must file the GSTR 9. Those who have cancelled the registration also need to file GSTR 9. In fact, certain issues have been raised that the 9 has not been available for filing in case of cancelled participants. So it is advisable to raise a grievance at the portal, saving the screenshots or taking a video recording of the screen recording of that your whatever you're trying to file it and all that, so that it will help you in case future requirement arises as to whether you have attempted filing or not. That can be of help. Why I am trying to iterate on all these things is there is a late fee and penalty implications for non-filing of GSTR 9. For time being, the due date for filing this GSTR 9 is 30th of June 2019, which is like just another 12 or 13 days left. Now, this being the scenario, suppose one does not file it on 30th June, what happens is post that there will be a late fee implication, and the implication of late fee is to the tune of 100 CGST and 100 SGST per day, that is 200 per day, up to a maximum of 0.25% of the CGST of the turnover and 0.25% SGST of the turnover, meaning combining it to 0.50% of the turnover. Up to that point in time, up to that quantum, they can levy the late fee on the for the fact that annual returns has not been filed. So similarly, there is a general penalty which could be invoked, where up to a maximum of 25,000 could be levied as a penalty under each of the acts. When I say each of the acts, it covers CGST Act, SGST Act, and the IGST Act. So where it could be a maximum of 75,000 as the general penalty levy for non-compliance with the filing requirements. Again, there could be a notice which could be issued as for the defaulters of for non-filing of the GSTR 9. I'm sure that if you are aware of the fact that if a particular month's 3B is not filed, then there is a notice under section under in the form GSTR 3A, which is given out to the defaulting assessees under section 46, which says that you have not filed your 3B returns, kindly file it within 15 days of time. So similarly, there could be a notice which could be issued if post the deadline or the due date if the GSTR 9 is not filed. So I'm just trying to highlight that what would be the consequences if somebody doesn't comply to this requirement of filing GSTR 9. Let's say somebody opted into the composition in the middle of the year, or somebody opted out and become a regular registered person in the middle of an year. In such a case, they are required to file two forms, one GSTR 9A for the composition period and the other GSTR 9 for the regular period. Thus, we already discussed that irrespective of the turnover, everybody is required to file the annual return, and unpaid liability, if any, suppose you have missed out paying anything through GSTR 3B, both during the period 17-18 as well as 18-19 up to the allowed time, then that can be discharged through the annual return. There is a separate challan for that, which is called as the DRC 03. However, the new instruction number 9 clearly specifies that such a discharge can be made only through cash, irrespective of the fact that there is a credit balance available in your electronic credit ledger. Yes, you heard right, that even though there is a balance available in the electronic credit ledger, you are supposed to discharge the liability, unpaid liability, only through payment to cash ledger, and thereby discharging it through DRC 03 challan. And missed ITC. Suppose the government, with the removal of difficulty order, enhanced the time limit for availing the input tax credits up to March 2019, subject to the condition that the supplier has uploaded the invoices and the same is getting reflected in your GSTR 2A. However, if it was not availed even up until March 2019, then you cannot directly go and avail it in the annual returns. The instructions are very clear about this, telling that missed ITC cannot be claimed through the annual returns. Okay, now coming to this GSTR 9 overview. Basically, to get a broad overview of the GSTR 9, there are 6 parts and 19 tables in it. Part 1 covers the basic information like the financial year, GST number, and the legal name and the trade name of the entity. Of course, although the mention is in the table 1 is of the financial year, it is very clear, even in the instructions it is spelled out, that data to be furnished, it is only for the period of 9 months after the GST came into force, that is from 1st July 2017 and up until 31st March 2018. So for this period, information needs to be compiled and presented in the annual return. Now GSTR, the GSTN number will be auto-populated, even the legal name and the trade name would be auto-populated in the return. Now part 2 is a liability table. There are 2 tables in it. Part 2 is a liability part where there are 2 tables in it. So the table 4 is the liabilities with tax outward supplies and RCM related. Whatever there is a tax implication, so that would require reporting under table 4, and whatever outward supplies do not have a tax implication, like my exempt supplies and all that, I'll be covering in a little more detail when I take up those particular tables. So no tax outward supplies. Now part 3 is the input tax credits. Table 6 is the ITC availed in the form. 7 is ITC reversals. 8 is the 2A reconciliation and imports related info. I'm sure most of you will have the questions regarding this 2A reconciliations. My supplier is not uploaded, whether I can take the credit and all that. Whenever that particular section comes in, I'm definitely going to answer on all those queries and how you take care of the same, without missing out those credits. So we'll discuss on that. Then part 4 is the tax paid details, which is the table 9, which is tax payable, and the tax paid details would be required to be furnished. Now, circular 26 adjustments, even in the beginning of the webinar I was discussing about this, because there could have been some human errors would have been occurred while filing the returns under 3B or 1. If at all, if such a situation has arisen where you have corrected your errors, if at all you have corrected in the period 18-19, then in such cases, whatever the data pertains to 17-18, but the same has been rectified or disclosed during the period 18-19, that needs to be reported in part 5 in the various tables, and part 6 will require other information like demands and refunds if there has been some inspection, or if a notice has been issued and a demand has been cast on the assessee, and those kinds of information needs to be furnished, and also if any refunds have been claimed. And so these information, and also table 16 requires the information of inward supplies obtained from a composition dealer, and job work related information, and also goods which are sent through approval. Then HSN outward supply summary, wherein in GSTR 1 table 12 we would have been furnishing this information, so that needs to be provided on a consolidated basis. We also have an additional obligation to report the HSN inward supply. However, a relaxation has been provided. We will discuss in those ensuing slides. And as discussed, if the forms are not filed within the due date, then definitely there's going to be a late fee repercussion which will be auto-calculated by the system. Let's quickly understand the journey of GSTR 9. Now, the requirement to file the annual return arises from Section 44(1) of the CGST Act, read with Rule 80 and Sub-Rule 1 of the CGST rules. This was, notified with effect from 1st July 2017 itself, and the due date specified in the Act is 31st December of the year following the financial year. However, everybody were anticipating how this form would look and what are the information that would be required to fill in this form and all that. September 4th, 2018, they issued a notification, and the design of the form and the format was notified with around 7 broad instructions. Okay. Then people started understanding the form and tried to figure out and made some representations and all that. So finally, on 11th of December, they issued a removal of difficulty order extending the due date for filing GSTR 9 to 31st March at the first instance. Then on 31st December, they came out with a new GSTR 9 form with a little bit of cosmetic changes to the form, and also added and changed certain instructions, because earlier people were, the form was not clear about if they had any additional liability, can they at all disclose and discharge via annual return, or what is the way out. So in the new form which came out in 31st December 2018, they gave instructions that any additional liability can definitely be discharged through the annual return via DRC 03 Challan, and to be discharged in cash only was the specified instructions, and they have added few more instructions which we'll discuss in a while. On 31st December, again, an extension for the due date of annual return filing was given, and thereby a removal of difficulty order was issued and extending the due date to GSTR 9 to 30th June 2019. However, although all this was done, the portal functionality was available to be to file the GSTN only by last week of February, that to the online mode. In fact, the offline utility came only recently in the first week of May 2019, which is the offline mode, and people had a lot of questions and a lot of clarifications were sought as to how to report certain things in the returns. Government has released a press release which is dated 3rd June 2019, wherein few clarifications were provided. However, some of the wordings, there are some confusions which exist, and some of the confusions which got added as well. We'll try to discuss and quickly try to understand some of the important points in it. Then clarification of auto population. A lot of people were complaining that there is a difference between the 2A downloaded form as well as the 8A auto populated in the table 8, wherein the 2A of the entire 17-18 related invoices will automatically populate. So there was, most of the cases, there was a reduced reflection in 8A compared to the 2A complete invoice-wise reports when it was downloaded from the very same portal. So the GST has even provided what is the data source which they have compiled from table 8A, and also the what does the compute liabilities tab indicate. So this has been the journey of GSTR 9, and this clarifications was brought out very recently, that is 3-4 days ago, that is on 14th June 2019 by the GSTN portal, which is available even now under news and news section. Okay. Now we will have the poll for the fourth question, as to, because most of the people have been facing certain issues with respect to filing of GSTR 9. We would like to understand what are the issues being faced, whether it is with respect to reconciliations, whether any technical glitches are being faced, or is it some law related issues as to you're trying to understand where to fill what, or whether it is any other matters which you're facing right now. So kindly participate in this poll so that we'll get an idea of what are your issues, so that even the question answer session can be considered and answered in those lines. So since this is the first year of GSTR 9 implementation, so there are quite many challenges that, there are a lot of interpretations being heard. We always listen to this word IMO, which is in my opinion. So wherever, many professionals give different interpretations of their own, and there's quite a lot of confusions in the minds of the people as to what is the right course of action and all that. In fact, I would like to bring about a point that the Institute of Chartered Accountants of India has come out with a very handy handbook on the filing of annual return GSTR 9, which is freely available for the public as well. You can get the handbook there, and there is a meticulous way of information which is provided in the handbook. That could be a point of reference. Now, the question arises once one looks into the GSTR 9 is, what should be the source of the GSTR 9 data? Is it the GSTR 1? Is it 3B? Is it books or the correct data? In fact, the new form which came out in 31st December with the 9 broad instructions plus the latest press release which has come out on 3rd June 2019, all this harmoniously read brings out a fact to us that what data needs to be filed in GSTR 9 is neither of 1 nor of 3B nor of books, rather it is the correct data. So we need to arrive what is finally the correct data, and then try to segregate and fit in whether it was discharged in 17-18, whether it was discharged in 18-19, or whether you are going to discharge it now while filing the annual return. So quick tips as to what information need to be furnished where. So discharge in 17-18, the new instruction number 4 which says that GSTR 3B. Okay, there could be a question that what is the difference between the books as well as the corrected data. See, there could be a possibility that even books might have contained some of the errors, like some duplicate invoices could have been there, or some invoices. It could be an outward supply duplicate invoice, or a credit note or debit note. So some of the things could have gone wrong even in the books. So while filing and compiling information, probably will come across that kind of an information, so which could be considered, and that could be the final data or the correct data to be considered for the purpose of the filing. So coming to this source of data, so where to fill the details of liabilities of 17-18, discharged in 17-18. So there is this part 2 which we discussed about in the overview part, wherein part 2 and part 4, that is it needs to be considered. So now a question arises, if there is a mismatch between my 3B and 1, what data will I put in there? So in fact, the new instruction number 4 is very clear that we should use the 3B data, because 3B is the place where we discharge our taxes, so that those to the extent of tax discharge in 17-18 alone needs to be reported over here in part 2 and part 4. Now, if at all we have recognized some errors and rectified it in 2018-19, that will be a subject matter of part 5. Reference to the new instruction number 7 could be drawn, and also the press release dated 3rd June 2019 has fairly clarified that aspect as well. Now, to be discharged through annual returns, suppose if we want to discharge that liability in the annual returns, then what we require to do is we have to report it in Part 2, also in Part 4 to manually add it in tax payable, and thus the difference between tax payable and tax paid already through the 3B needs to be discharged through DRC 03. This is with respect to the instruction number 9 which got added in the new form. Now, so the press release dated, some note points we have. So the due date as per the press release is 30th June, although it mentions the last date, we need to read it as the due date. Then the cutoff date for 2A auto population in table 8A is provided as 1/5/2019 as per the press release. However, the GST and clarification says it's on 30th April. Anyways, nevertheless. So then table 8C to contain details of ITC availed from April 18 to March 19. See, there was a question in the minds of the people because Part 5 of the annual returns contained when we tried filing it on the portal. The period mentioned was up to September 18. But however, the removal of difficulty order provided up to March 19. So people were a little confused as to what was required to be followed. However, the press release clarifies that April 18 to March 19, and today we can even find that update available in the portal as well, where that month has been changed to March 19. Now, tax paid in 3B is the basis for reporting in Part 2 or Part 5. So it is very evident and clear that even though the one has gone something else, what we need to do is we need to arrive the segregations of the data in accordance with what has been paid through Form 3B. Now, suppose if somebody wants to declare any additional outward supply and the related liability, then they can go ahead and declare it in Part 2 and Part 4 and discharge it through DRC 03. If GSTR 1 details are incorrect and hence auto population data is incorrect but taxes paid in 3B is proper, one needs to report either according to the books of accounts or the returns, whichever is correct. This was also a point of clarification brought out in the press release. So they say that whatever auto population is there, it's only a functionality. I'm sure you would be aware that if you try to alter or edit that data beyond a 20%, then it will get highlighted and a message pops out that you're about to make a change which will have either a 20% upward implication or 20% downward implication. So nevertheless, you can still go ahead and correct it. That is only a pointer. We can take note of this in press release paras. Then IGST paid at the time of import. See, people had another concern that if we have imported certain things and the IGST was paid at the time of bill of entry, but however the same was not reported in 3B. Could be a fact of a missed out credit, or could be a fact that although I cleared for home consumption and by paying the IGST at the time of bill of entry, but I have not yet brought it to my godown or the factory or wherever the place it is. So in such a case, there was no particular table where this could be reported which was availed in the period 18-19. So that being the case, the government has clarified that taxpayers need not panic about this, and whatever they have availed even from April 18 to March 19 could be reported in table 6E itself. So there is a last point which is a little clumsy or which is a little unclear as to what is the intention. Probably a harmonious reading of all of these would state that suppose if any of the interest or penalty repercussions which we are trying to interest or the other RCM related discharges and all these things we are going to discharge through DRC 03 through the annual written form. So then suppose if it is not pertaining to the outward supply related liability, so then definitely and table 8A of GSTR 9. One is GSTR 2A contains filed, submitted, saved data, but ATI contains only filed, because some of the suppliers would have simply submitted or
Sorry, the number you have dialed is busy. Please be online or call again later. क्षमा करें, जो नंबर आपने डायल किया है वो अभी व्यस्त है। कृपया लाइन पर बने रहें या थोड़ी देर बाद दोबारा कोशिश करें। Sorry, the number you have dialed is busy. Please be online.
Sorry for the interruption. Please be online. Ms. Annapurna had put it on hold. We are connecting her back.
So we had some call connection problems, so we're back now. So again, the information pertaining in table 8A, it contains the final figures after giving effect to the amendment, and whenever there is a place of supply issue pertaining to the point that the place of supply and location of recipient is not same, so then it is excluded in ATM, meaning that if a person goes, if a registered person is of Karnataka, but he avails a hotel facility where he stays in a hotel outside Karnataka, in such cases the credit would be available of that particular state, that is the CGST, SGST, particular state. That IT would be excluded appearing in my 8A. And also, 8A does not contain information of period where the recipient was in composition. And finally, we have also provided one more clarification. The compute liability button is only meant for computing the AC, only because people have apprehensions that once they compute something comes as payment and all that. So, finally, understanding this mode of difficulty would be of more relevance Uh, since in 2017-18 was the initial year, as per the law, the credit availability for a particular year extends only up to September. The due date for September return of the following year. So for 17-18, initially the availability of ITC availment was extended up to September 2018 returns. That is, the due date was on October up to October 25th. However, owing to the representations of the people, there was an extension available to the extent of availing credit if a supplier uploaded the invoice up to 31st March 2019. Thus, only the extent of my availing of income tax credit, this extension was available, if we understand it this way probably, and any changes of or any disclosures which I'm required to make from the liability perspective would still get restricted up to September 18, it says my due. Now, looking into the annual form, written form, table 4, as we were discussing that, it is a liability-related table, and table 4 contains information whenever tax has been needs to be discharged. Table 4A contains information of furnishing the B2C supplies net of credit notes and debit notes and net of amendments, so that the same way we were reporting it in the GST 1. Similarly, the 4B is the B2B. Here we need to furnish information gross. Zero rated supply, which is my X, which payment duty needs to be provided in 4C. And 4D is the SEZ payments with tax, and 4E is the deemed exports. Coming to this 4S, we need to provide information pertaining to advances which tax has been paid but invoice has not been issued. Meaning, if I received advance of 1 crore rupees during the year 17-18, but the invoice has been raised only to the tune of 90 lakh rupees, then 10 lakh rupees only requires reporting over here. And the inward supply which tax is to be paid on reverse tax basis, here we would have discharged the RCM. I'm not aware of the much talk about provisions and the GST. There's a lot of confusion still persists among the assessors as to whether it's there or not, or packing there and packing not, and all that. Probably we can take that as a discussion, as it requires a lot of dwelling. As far as the annual return is concerned, if it was already discharged in the very same year, the same needs to be required here, that is 17-18. However, if something was discharged in the RCM, now post compiling the information, this RCM is needs to be discharged, then one report over here in 4G and also show it as tax payable under table 9 and then pay it to GST 03 Challan. Since we had a technical issue of call connection, probably we can extend the webinar by another 10 minutes or so that I can quickly run through certain important points. Now, coming to this credit notes and debit notes reporting, wherever it is the B2B related information, to report the invoices separately and the credit notes and debit notes separately, we should take note that the credit notes and debit notes dated 17-18 year only needs to be reported here. Although, if in a case if the credit note is dated April 2018 pertaining to a supply 17-18, then that should not be reported in this table. Again, the accounting credit notes, commercial credit notes should not be reported over here. Then, owing to the circular what we discussed earlier, whatever else was rectified or amended in the in the next following returns, that needs to be reported over here. A delta of the amendment needs to be reported, meaning that the difference of the amendment, let's say I amended a 10 lakh invoice to 12 lakh invoice, difference of 2 lakh only needs to be reported over here. Then, similarly, the downward reflection also to be reported only the delta of it. So, coming to this table 5, which is about the exempt supplies, here one needs to classify the information wherever tax implications are not there.
like the zero rated supply and the SEZ payments and the RCM wherein person provides outward supply RCM.
Participants, we have the speaker again. Sorry for the long hold. Ms. Annapurna, you can go ahead.
Yeah. So we were discussing about the reporting of the exempted supplies, which is the subject matter of Table 5, wherein we segregate the information pertaining to the exports, the SEZs without payment, and wherever the wherever the supplier provides a reverse charge service like the GTA services, and the exempted, nil rated, and there is an additional information which we are supposed to give, which is called the non-GST supply, including the no supplies over here. Now, there could be a possibility that while reporting in GSTR 3B or 1, we have missed out reporting on certain aspects of exempted supplies or where there are no tax implications. So I am of the view that we can definitely go ahead and report it in the annual return, so that the correct information we would be providing here, despite the fact that we did not report the same in the 3B or 1. Of course, it might highlight you because there could be a 20% upward or downward impact therefrom. So, but still, it is advisable to go ahead and report over here. Again, the credit notes and debit notes pertaining to these particular transactions where there are no tax implications, and also the amendments made would require to be furnished over here. Now, finally, we get a turnover of the company as a whole, of the entity as a whole, which includes all my taxable supplies, exempt supplies. However, there is a reduction of the RCM related, inward supply taxable value for the purpose of turnover arrival over here. Now, coming to this input tax credit, now although some of the information is auto-populated and some of the information can be compiled using certain tools and all that, there is quite an amount of human analysis which would be required for the purpose of compiling the information to be provided in the annual return. Like, one is that ITC related information, which is like, if we look at this table 6 of the annual return form, it says that we need to segregate the inputs into 3 categories, that is the input services as well as the capital goods. Thus, we need to bifurcate all our credits what we have availed into these 3 categories, wherein if it is pertaining to the goods, it will be inputs, where it is pertaining to the services like the rent or the professional services and all that, it would be input services. Then if it is capital goods, if I purchased a fixed asset, then that needs to be segregated accordingly. This is quite an amount of work which requires to be done. Probably segregating it with supplier wise, getting the information could be a good idea to compile this particular information. Also, my GTA related, my reverse charge related information needs to be segregated into registered as well as unregistered, and also the import of goods. Thus, whatever I provide in my 3B, a breakup of my ITC, the same requires to be segregated here separately into inputs, input services as well as my capital goods. Then the transitional credit related information, whatever we have availed to Tran 1 and Tran 2, that needs to be provided here. Again, if we have availed any other input tax credits, ITC 01 or ITC 02, that is like I have opted into a regular scheme, or there is a business transfer which has occurred like amalgamation or merger, those kind of information which where the credit has been availed needs to be provided here. Again, there could be a lot of reversals issues wherein the input tax credit related reversals like the 180 days creditors aging analysis, we didn't pay the creditors within 180 days, that needs to be reversed. Then we have the common credit reversals for the inputs and input services and the blocked credits. These segregations needs to be made even in the reversals part, and if any Tran 1 related reversals are done, those requires the reporting over here. There could be other reversals as well, like the ITC 03, which is my opting out of the regular scheme and opting into the composition scheme, and other reversals like the purchase returns and the credit notes. Those reversals of ITC needs reporting over here in a segregated manner. Now, coming to this 8A comparison of my, this is where the GSTR 2A will come into the picture. The reconciliation of GSTR 2A becomes mandatory owing to this table 8. Now, there could be a situation wherein the auto-populated data of 8A, we just discussed that why there could be differences as clarified by GST in portal as to the differences between 2A and 8A. So this information is requires us to compile the reconciliations of 2A. There could be a possibility that 8D is a negative, 8D is a nil, or 8D is positive. So we have to take a call in all these situations. And one important point to note here is in my 8C portion, I have to provide the information of the ITC which I have pertaining to 17-18 but which I have availed in the year 18-19. This is a very important activity. So thus 2A analysis makes it mandatory to be done. So out of this, let's say 8D is positive. There is more credits in 8A than what has been availed. So the reason could be that some ineligible credits have been populated in the 2A. So that needs to be reported, and also there could be a possibility that some credits have been missed out availing. So whatever is missed out will be the subject matter of 8E. 5 minutes to wrap up this whole content so that we can take some questions. So the annual return format of table 9 which requires this the tax payable as well as tax paid information, we were discussing that whenever we make payment through DRC 03 directly through the annual return, so we need to mention the tax payable over here. Paid would be auto populated and non-editable, so the difference we would discharge through DRC 03. Now, this is the part where we report the discrepancies, the rectifications which happened in the year 18-19. So, wherever there was upward amendments or declarations, that will be the subject matter of 10. Wherever it was reduced, like I paid excess in my 17.
Sorry, the number you have dialed is busy. Please be online or call again later. क्षमा करें.
Ladies and gentlemen, please stand by. Ms. Annapurna, you can go ahead.
Yeah.
You are live.
Yeah. Okay. So it's very important to note that whenever we have paid the taxes of 17-18 and 18-19, we report in this part 5 multiply the supplies and the tax part, and whatever was payable and paid would be reported in table 14. So the refunds, whatever has been claimed, sanctioned, rejected and pending, this segregation of data is important and to be reported in table 15. And demands, that is, have been raised and discharged. It could be discharged either through 3B or through DRC 03. Both needs to be reported over here as paid. And if something is received as a notice and taxes have not been paid, whatever is pending also requires reporting over here. Then this table 16 requires reporting on supplies received from composition tax payers. I mean, this is quite a challenging task to do. Anyways, the report asks for this information. And if in case of job work, whenever the input doesn't return back to the principal within one year, or in case of capital goods, it doesn't return back within 3 years, then that will be deemed as a supply, and that deeming will come right from 1st July, right from the initial day of supply. So it's a retrospective deeming provision. Hence, one needs to be reporting even on that, and goods sent on approval basis. Whenever goods are sent on approval, if it doesn't return within 6 months or it doesn't get converted into an invoice, that will also be deemed as a supply under GST. That needs reporting here. Now, HSN related information, wherever the turnover is above 1.5 crore to 5 crores, then 2-digit reporting. Yes, and whenever it is below above 5 crores, it is 4-digit reporting. However, those taxpayers whose turnover, when I say turnover, annual turnover for the previous year, that is 1780, meaning the 16-17 turnover should be the consideration, and based on that, either no reporting is required, or 2-digit reporting is required, or 4-digit reporting is required. Similarly, there is an inward supply consolidation which is required here. Again, quantitative details needs to be provided. However, there is a relaxation which is provided that up to only 10% or more of the total value of inward supplies only required to be provided in the inward supply part, meaning I have to consolidate my total inward supplies, including even the exempt inward supplies, and whatever crosses to the extent of 10% only requires reporting. So then late fees and auto-populated table, there is a verification clause which is very important according to me. This says that the assessee owes the responsibility to correct information, and he also through this annual return, which will be either digitally signing or submitting through an EVC, telling that he has not concealed anything, and any reduction in output tax liability will be passed on to the recipient, meaning if any rates have got reduced, he will be passing that benefit also to the recipient. So this would be the declaration which will be given. So, and post this, probably, department gets an opportunity to invoke provisions under Section 54, meaning penalty provisions can be higher and all that. That is why we always try to, advocate that in case of furnishing of information for annual returns, one needs to be extremely careful, and correct and proper information needs to be provided. This is a snapshot of what all areas require manual compilation, just for the information of our users. And there are some examples which is given, and this is shared. This presentation is shared, so people can try to access this information, try to figure out what has what category they fit into, so that they can make use of these illustrations while filling the form. So now the forum is open for question and answers. Over to you, Pragya.
Thank you, ma'am, for sharing this thoughtful insight. Now, dear delegates, it's time to take your queries. I will mute and unmute each person one by one, and you may ask your question on the chat window appearing on the right side of your session. You can also press 0 and 1 on your telephone keypad to ask audio questions.
Thank you, Pragyat. It's now time for the Q&A, and my apologies once again for that glitch that actually happened, due to which the line got disconnected, but thankfully we're back online. So, Ms. Anpurna, thank you for the presentation and for taking audience through so much about knowledge about GST. I noticed a couple of questions that kept coming in via chat, so I'll go ahead and start off with them. So, one
Yeah,
question
sure.
was about what
Mm.
technologies are used to automate GST filing.
Okay. You see, basically, whatever software I use, we must ensure that the configurations are done properly. The registered person related configurations, or be it the reverse charge or the forward charge related configuration, so that whatever data is keyed in appropriately sits and segregated in that return related information. So that would be the first key to, for the businesses to configure right at the stage of data input. So, and secondly, when it comes to the reconciliation report, there's so many softwares available in the market for the purpose of reconciliation, which can be, avoid a lot of, human in that, because there's quite a lot of information to be compiled. See, for example, we use GST Zen for the reports which is fetched for the comparisons. There are softwares which are available from ClearTax and the Relion. There are so many softwares available. I think for a reconciliation 3B and 1, it would be ideal to use a software plus fetch the information from the books to have a comparison. Sharing one reconciliation template which I've prepared, probably if that is of use to the participants, definitely you can share it across to them.
Okay, thanks. And another question with the same person is, what are the ways of communicating the platforms to the customers when it comes to GST?
I didn't get the question. What are the?
What are the ways of communicating platforms to the customer when it comes to GST?
As far as the registration is concerned, there is a requirement for the display of the GST number and the registration certificate on the registered premises. So that very fact brings out that you are a registered person. So you can communicate to the customer saying that I am registered under GST, I am supposed to collect these taxes and furnish the requisite government. So it is basically a collection and payment. Next question, please.
Yeah, thanks. And can we claim credit inputs to the next financial year?
See, as far as the credits of July 17 and 18 is concerned, we need to split the data parts probably. Whatever is availed in 17-18, no doubt you can claim it. Whatever is availed in 18-19, up to September 2018 returns, that is 26th October, you can claim the credits. But post that, if you are claiming the credits, compulsorily reflection in 2A is a must. So based on the factors of the case, we can take a call on the eligibility of the credits. Yeah.
Okay.
There is another question associated with it. So it's a very critical question which most of the people ask. I would like to take it up and answer.
Sure.
So they have this question which in their minds, whether if 2A, there is no auto population in the 2A, meaning my supplier has not filed my invoice. Although I have a proper invoice available with me, I have paid taxes to him. Probably he has also paid the taxes. Only thing is he missed out uploading on the portal in GST-1 as B2B. Probably has done it in B2C or whatsoever reason. In such a case, what it would be advisable is taking the tax paid confirmation from the suppliers would be a wise choice, so that we can segregate those invoices what has not got reflected in 2A, and the supplier that yes, taxes have been paid for all these invoices, although it is not reflecting in 2A. Again, there is a circular 59 para 2.3 could be referred for this purpose, which can be handy. Yeah.
Okay. So there is also a question on the difference between books and correct data. Okay. What is the difference between books and correct data?
I mean, ideally, if all the corrections have been made before finalizing for the IT purpose or the statutory audit purpose, fine. But some errors could have existed even after the finalization. Like there could be a duplicate claim which is made in the books and all that. In such a case, what needs to be ultimately considered is the correct set of data.
Okay. And if the taxes paid by DRC 03 because of the notice from an officer in 2018-19, then should it be shown in Part 2 or Part 4?
So the question is like, it is 18. the notice is received in 1819, but it
Yes.
pertains to date of 1718, discharged in 1819. So ideally, it is more like an information to be provided in the part 6, which is other information.
Okay. And
Yeah, and not.
yeah, please go ahead.
Yeah, part 6 other information where demands. There is a section which I discussed about demand. There we have taxes, taxes paid and taxes pending. So in that paid column, they can furnish that information.
Okay. And why is the composition scheme reference given for GSTR2A? They do not enter the details invoice. So somebody
See,
wants
let's say
to know
there is a person, let's say there is a one Mr. A or an ABC company which is earlier into a composition scheme. Okay, let's say for the first 4 months it was into composition scheme. Then after that, balance 5 months it was in the regular scheme.
this.
So for
Okay.
that first 4 months when it was in composition scheme, although 2A auto population will fetch invoices for them, that will not be eligible because a composition person cannot claim the credit. That is the reason.
Okay. Okay. So there
Okay.
are
I would
several other
like to
questions.
also, I would just add a point to that demand thing which they raised in the previous question, whether it has to be part 2 or part 5. Okay. So firstly, if it is anything related to outward supply or input tax credit, then probably, considering since it was discharged in 1890, part 5, it could be reported, but there could be other liabilities, like where an inspection happened, or e-way bill issue was there, and then notice was issued and then discharged to BRC 03. It is not concerning to the outward supply liability or the ITC related part. Then it can be directly reported in the part 6, that is under table 15.
Okay. So we have several questions on chat, but we'll just put a hold on that. In the meantime, we'll check if somebody on the audio bridge wants to ask a question.
Yeah.
So
Sure.
So Pragyat, can you please check?
I would again request all the participants, if you wish to ask any question, please press 0 and 1 on your telephone keypad. Mr. Chopra, I would turn it back to you as there are no questions on the audio.
No problem, no problem. Okay. So, another question is that if demands are not appearing online, how do you report?
Yeah. See, there is a recent survey which has come out and it says that the offices have to provide the online, challans which needs to be provided. Probably I can drop you a reference. You can redirect that questions to me. I can give them the reference of the circular so that they can reply back to the offices, owing to which they are mere giving the physical notice is not sufficient. They have to upload the DRC related challans and the liability online as well. This is with effect from 1st April 2019.
Okay.
Else they'll have to voluntarily go for a challan and make the payment, do a letter submission and do a correspondence for the future record purposes for the reason, and get it acknowledged from the department for record purposes.
Okay. And another question I'm repeatedly getting is whether petroleum products can be brought under GST in this financial year.
Okay. So as far as the media reports and all those things are concerned, probably it might take a little more longer. Probably it could be the agenda for the next year. Right now, I also see it as like it might not come in this very same year.
Okay. So unlikely to come this year. Okay.
Yeah.
And you mentioned that the GST filing last date is June 30th, right?
Due date. Yeah. Due date is
Yeah.
June 30th.
So somebody is asking, is there any chance of extension of the due date to file the annual return?
Again, it is like speculation going on. Of course, presentations have been received and everybody are looking forward for that GST Council meeting upcoming on June 20th. Yes, hopes of, there could be taxation either in the form of waiver of late fee or extension. But I am of the view that definitely there is not going to be withdrawal of the farm asset. So it would be still advisable to try and compile and keep the information ready and take a call on it.
Okay. So, that was the last question I had. If there's any other question on chat you would like to ask, any one last minute question, we'll wait for a minute because we're already running late. And if you have any one last question, please post it now and Miss Anpurna will be able to ask. we'll be able to answer those questions.
Participants,
So
if you wish to ask any question, please press 0 and 1 on your telephone keypad. Alternatively, you can post your questions over the chat appearing on the right side of your window.
yeah, we'll just wait
Okay.
for a few seconds. Yeah, please.
Question which I'm looking in the chat, it says that with regard to box 8B, that is the table 8B, if it is positive, it means that 2A is more and 3B is less. Whether there is this situation leads to suppression of sales and legal consequence. Okay. Firstly, the facts needs to be ascertained. There is a reflection in rightly a reflection in 2A, which is supported by an e-label being generated, and there is a movement of goods and receipt of goods, meaning the transaction has actually happened but has not been recorded in the books. If it definitely turns out to be that case, definitely there could be a legal consequences following thereof. However, if somebody has wrongly uploaded, and it would be definitely a wise option to go and inform the department that this kind of an upload has occurred, and tell them that although tell them in the sense we can draft it in a letter and produce it before the department, telling that these 2-year auto populations are reflecting. However, I have not made any of these transactions per se. We are hearing all these kinds of scenarios also from the public at large, that are facing these kinds of situations. However, it depends on the facts of each of the case, wherein what is the transaction, whether the transaction has actually happened or not.
Okay. Thank you, Ms. Annapurna. I don't think we got any questions after this, so that I think
Okay.
question was directly to you. But thanks a lot for sparing your time and answering the questions and taking such a detailed, wonderful question, topic on GST. So I'd like to thank you for that, and thank you all the delegates, attendees for patiently waiting also during the disconnects and listening through the entire webinar. We really appreciate your time. But like I said, that this is the first webinar which is part of a complete initiative that we have started on Be Unstoppable. So please do feel free to keep posting your questions. Send us your questions. We will try to get them answered. I'm sure Ms. Annapurna would be happy to answer any questions that may come later as well.
So I've just put up my slide, the science slide on the wherein they can ping me for any of their questions to info@annapurnashrikant.com. I would be happy to answer their queries.
Yeah, thanks a lot. That will be really, really
Thank you
great.
so much for providing me an opportunity to interact through this webinar. I mean, we all wish that these technical glitches hadn't occurred. But anyways, we do not have a choice. We have to manage with the things. We all tried our best to do what could be done. So I wish everyone a happy compliance.
Yeah, but thankfully the good thing is that we had such a wonderful Q&A round despite all the disconnects and technical glitches. So which shows that people are really, really interested in this topic. So thank you, Ms. Annapurna, once again. And thank you all the attendees. It's time to wrap up now, and I'd now like to hand it over to Pragyat. Just when you disconnect, you will get a feedback form. Please do fill it up and let us know, have your feedback, and so that we know how you found the webinar, and if you have any further topics of interest that you'd like to listen to. Thank you, and have a great evening. Over to you, Pragyat.
Thank you, panelists. Thank you, speakers. On behalf of Tele and CMR, I would like to thank all the participants for joining this webinar. We hope it has been a useful time spent with us. Thank you and have a nice day. Request you to kindly fill the feedback form at the end of the webinar.